Let me start with a question I like to ask all my guests right at the beginning. What's your current assessment of the global economy and financial markets?
The concerning thing for me is, as I look at 2023, I think it's going to be almost impossible to avoid that recession. And that suggests that what we've seen so far in 2022, among the worst bear markets in history, has largely been a byproduct of inappropriately tight monetary policy combined with some fiscal tightening that was a natural byproduct of rolling off of COVID stimulus. That's now likely to manifest itself as genuine financial stress and recession and economic condition stress in 2023.
Do you think the Fed's doing the right thing, given the current environment?
The administration decided to try to prevent unpopular things like price increases occurring. And it's just really hard because it's so frustrating to me that people who want hands off look at prices and immediately say, that's the Fed, when the reality is that's a signal that's being sent by the market, reallocate resources, right? It's so frustrating to me to hear people say, the inflation is caused by the Fed. No, the inflation was caused by shutting down the economy and then trying to restart it with a totally different purchasing basket. Right, that's what we saw over and over and over again. And the research on this is really clear. This was largely about a shift in relative prices as compared to a shift in absolute prices. Now, our decision to react to it likely has turned it into a permanent shift and a permanent interjection of volatility into the system that's going to make everyone poorer.
I mean, I think that those that are in favor of capital markets are in favor of those types of price signals, right? Because they're basically telling the economy where you need more supply and less supply.
Correct. That's exactly it. And it's, again, what I find so perverse is those who were most against an activist Fed when the Fed was loosening under disastrous financial conditions. And I am the first person to admit that the Fed stayed loose for far too long, unfortunately, for political reasons, or what appear to be largely political reasons. And the minute they reversed that, it also appears to have been largely political reasons, right? And so, it just became unacceptable to have this level of inflation and not do anything. Well, if you're against an activist Fed, you should be against an activist Fed making a decision regardless in that framework.
Right. That's so interesting. And I find it interesting, too, that everybody who said, don't fight the Fed, for the past 12 years, as the Fed kept pumping liquidity into the markets and keeping interest rates at historic lows, and they rode that asset bubble up. They're all now bitching about, the fact that the Fed isn't doing what they wanted to do, right? So they're trying to fight the Fed and still buy into this market. And of course, the Fed has been pushing markets. The Fed's actions have largely been pushing markets down this year. And it's so funny that the folks that have been clamoring, don't fight the Fed, are now actually the most ones pushing back on what the Fed is doing.
Well, again, I just think that there's no intellectual honesty amongst thieves, right? And we're all thieves in one form or another. So, when the Fed does what we want it to do, we applaud it. When the Fed doesn't do what we want it to do, then we, lambast it. I try to be intellectually honest and say, look, if you're against intervention, you should be against intervention in both directions.
Do you think the Fed's response, it sounds like you think the Fed intervened in the way that it should, given its mandate as a central bank during a crisis like the pandemic. But do you agree with what the Fed actually did, or would you have either had it done less or intervened in a different way?
So what really happened, the Fed cut interest rates that led to mortgage rates falling by between 50 and 75 basis points, depending on how you want to think about it. That's remarkable, not in the context of the absolute change in interest rates, but because that occurred in an environment that people were actually even able to get mortgages in a period of 20% unemployment briefly, right? Mm-hmm. If you just think about the economic uncertainty and the unwillingness of traditional financial markets to extend credit under those conditions, it could have been a truly disastrous scenario.
How high do you think rates are going to go? Powell's kind of guiding us to a 5.25 range in the federal funds rate. Do you think he will get there? And one of the reasons why I asked that question is we've had a number of people on this program who are skeptical of him being able to get there because, quote unquote, something's going to break first.
The behavior we're seeing in financial markets is very similar to what transpired in the global financial crisis, where people forget that basically through September, through the beginning part of September, this was largely a normal recession and slowdown. And then something really broke, right? We allowed Lehman Brothers to fail under the moral hazard framework, and that sent the world into paroxysms, right? Spasms. I honestly believe we're setting up something similar here.
Okay. And what would be some of your top candidates for, a domino that could really start that kind of contagion?
Really important dominoes continue to be things like passive investment products, right? So largely through this whole year, we have not seen significant selling of passive products by retail. We've seen tremendous amounts of selling by professional investors who have lowered their discretionary exposure in everything ranging from volatility products, risk parity products, balanced portfolios like target date funds, et cetera. Those have all contributed to the behavior that I think that we're seeing, but we have not yet seen retail basically say, okay, I'm out, right? My fear would be if we get to the point that we start to see rising unemployment, that the positive impulse that comes through things like contributions to retirement accounts turns into a modest outflow that then becomes a far more distressed situation.